All right, guys, welcome back to the channel. Well, Bitcoin closed out the week relatively strong, holding within its trading range now for the last 7 weeks. However, the stock markets closed out very weak, some of the lowest levels now closing in on the gap from the Trump election, that Trump pump back in November. So there could be more uncertainty, also leading to a false sense of security for your Bitcoin and crypto enthusiasts over the next several weeks, which is what I want to get into in today's video. We haven't seen Bitcoin rise to these levels while the stock markets have been weak. So a couple of key levels to watch out in today's video, along with any sort of downside. There is some icing on the cake here with this weekly close, but I'll get to that in today's video, along with the rest of the macro cycle update here at your home of macro cycle analysis. We're going to cover Bitcoin, cryptos, the stock markets, and the real estate cycle. And of course, for a nice dose of economic information, I'm going to throw that in as well in today's video. So make sure you hit the like button, subscribe to the channel, plus your copy of the Crypto and Economic Report is in the top of the video description. Click on that link, email, name, and you will also get some sign-up bonuses there. More on that later in the video, but let's go back to our agenda for today. We have the stock market cycle data, more on the inflation and commodity prices rising. There are now signs, and as we've been talking about over the last couple of weeks here, you're starting to see those breakouts for energies. Some more professionals, Wall Street being too bullish at the wrong times yet again. Surprise moves, I think, in this first half, but the overall cycle still intact here. I don't see any changes to that. However, I think the first half of the year is now developing into something that's a little bit more difficult for most to, I guess, comprehend just based on some of the data that we are seeing here and, of course, with the charts. More on the stock markets, crypto, Bitcoin, etc. So let's just dive straight in here. And one thing it seems like the market is adjusting to is the possibility of no further rate cuts. After everyone was so hopeful of more and more rate cuts, it's basically been the narrative, or at least been in the headlines over the last 12 months, where a lot of emphasis was placed on rates getting cut. And you might remember back 12 months where I was talking about the interest rates and how they probably wouldn't be cut for some time. And basically throughout 2024, we didn't see any rate cuts up until roughly September. So the market had to go a long time without rate cuts. And it seems now, when we look at the probabilities here, with another 17 days to go, it doesn't look like we're going to get any rate cuts, or at least what the market is suggesting, up until, again, September of this year. So at first, there was a lot of pricing in that the market would get some rate cuts. It doesn't look like it's happening this time. Could that mean that we actually get them when people aren't expecting them? Of course, anything is open to these sort of outcomes. However, it seems like the Fed is positioning themselves not to give as many rate cuts, but it seems like the market will still be able to increase, but just at a later stage. And what I think has happened here, and of course you can have your own opinions, everyone's welcome to their own opinions here, we did see a lot of bullishness step into the stock markets. And so where this is all relating to with the crypto and Bitcoin is when you see far too much bullishness every single time at those turning points, basically you get a bit of a pullback, or at least a pause in the market, because everyone starts to pile on at the wrong times. And like we saw coming into the end of 2024, all of the forecasts from your Wall Street bankers, S&P 500s, they're looking for at least a 12%. When you look at it on average, a 12% increase on the S&P 500 for 2025. Now, I dare say if this first half of the year isn't as clean as they would have liked, doesn't give you those gains that many are hoping for, well, then they might adjust their targets, maybe back down to some of the averages, maybe even further if we see the S&P drop, which is what I've got coming up next, some of that data as to maybe where the S&P could continue to. And so that might allow us to reset the sentiment through the S&P 500, for cryptos, for Bitcoins, and then allow some more of the buying action to step back in. And so this table here is years when the SPX, so basically the S&P 500, does not close below its 200-day moving average are strong. The years after this event, or these events, show erratic returns. So basically, here are the years when the S&P didn't close below the 200-day. It can touch it, but it's not the end of the year. It's just any day within that particular year. Shows you the presidential cycle year and then the annual returns, all pretty decent returns here, except for the 7% back in 1993. But basically, you got an average there of about 25%. And in 2024, basically hit dead on that average. Now, the following years aren't so great. It's basically a 50-50 split of positive returns here. So why this is important for Bitcoin and cryptos is that if we are going to see a bit of an erratic time over quarter one, sure, prices could go up. Maybe they press to new, fresh all-time highs. But in terms of the trend, it might still be a choppy range. Then I think that's going to affect Bitcoin and cryptocurrencies as well. Just as a side note, all I've heard over this last 12 months is anytime cryptos get into a positive position, everyone, X, YouTube, you name it, they jump on the bandwagon and it's just markets are going to go up. It's baked into the cake and we are going to see some alt season. Some things run, a lot of things don't, and then everything sort of rolls over again. So it seems like this big stop and start type of market. But the silver lining, the positive, the hopium, if you will, is that the stronger stuff continues to put in higher lows. So if you stick around for these periods of, say, erratic returns, trading ranges, the volatility, the boring times perhaps, when your mates aren't talking about it, then you might be able to pick up some of those lower areas in the market. And when things start to run and you hear your mates start talking about it, or maybe the family's talking about it, then that's the time you're making your gains, potentially a good time to be taking some of those profits as well. So yeah, basically just looking at these returns, 50% of the, well, 50-50, and as I said, 50% of the time, you see the next year having positive returns. Now, as I said, I still see this year ending in the green. There hasn't been anything to say that we're not going to end in the green. Obviously, the main one here is the 18.6 year cycle. I've been following this now since the low. It's been going dead on track towards this peak, and the peak is coming up. You can see here, these years are looking at 2025 to 2026. No confirmation yet that it's over, so we still have to assume that the trend is up. So just quickly to this point here of the returns for the S&P 500 and that 200-day moving average. That's your orange line there, the 200-day moving average. Where could the stock market fall to? Because there's a 50-50 chance that you see at least a day underneath the 200-day. So if this happens, more than likely, Bitcoin and cryptos will also get a pullback. We've seen a pullback on these markets. I dare say you're going to see something on Bitcoin. I'll get to that in a minute before I go off too many different tangents. Orange line, what's the number? The current number is 5,572 points. But of course, as the days go on, this line continues to creep higher. And if the market continues to go down, you're still getting an average that's moving higher. But if the market continues to go down, it might even meet up dead on, we'll see, with the 50% level at 5,600 points. But we have this 50% level from the low to the high. It's basically just a calculator, split it through the middle. So we're looking at some sort of support coming in around that 5,600 point. Can it go lower? Definitely. We've seen it many times before. 2023, it went underneath, spiked back above. 2022 was obviously a bear market year, so it remained under there, got rejected again, broke above, and then higher lows formed, and basically bull market continues on. There was no close under it for 2021. So there's the start of 2021, there's the end of 2021, and it was a big year to the upside. Last time that happened was 2017. So prior to 2021, there was 2017, and then it came through in 2018. A couple of touches there, big collapses for 2018 and big V-shaped recoveries to then test the 200-day again. And basically, we'll go back through history and you can see every sort of couple of years, maybe even every 4 years, because in 2013, there was a time there where the S&P 500 didn't hit the 200-day moving average either. You get these pretty significant runs. Then the market pauses for a bit and then starts to head up again. So that's the next number to look at. Still, roughly around 5,600 points for the S&P 500 for some sort of support and potentially some sort of reset here for the markets. Now, another sign here is from All Star Charts, just looking at the RSI. So the RSI is showing a bit of a bearish divergence here. Lower highs forming there. You can see the red arrow, and the stock market continue to put in higher highs. So if you're following your RSIs, you can see that playing out again. That doesn't mean that the game is over. It doesn't mean that, where's my forecast here? That one there. It doesn't mean that this is the end, but within this move to the upside, as you can see, there are no swings in it. That's essentially what you can expect on this move to the upside. So more of the same. And so if the S&P gets hit, especially with the breadth, meaning you've got less stocks pushing the price around. So maybe it's the top 5, top 10 tech stocks, essentially, the biggest companies in the S&P and the NASDAQ. Those are moving most of the market, and the rest of the stocks are basically not having the greatest time in terms of returns. If that occurs, and if we see these prices roll over a little bit here, probably too much for most people, just a little bit here, then you're going to see the NASDAQ get hit more so. It's essentially like Bitcoin and cryptos. Bitcoin comes down, cryptos get absolutely slammed. And if you've got most of the stocks that are doing the movement here, and then most of them are in the NASDAQ, well, of course, you're going to see the NASDAQ get hit even more so. But overall, nothing has changed there. It's basically a bit of a surprise move, in my opinion, especially when we saw in Q4 a lot of the Wall Street, a lot of the, analysts and media and everyone else getting very, very hyped up, very, very bullish, especially as Bitcoin hit 100K and then $108,000. Everyone getting really, really excited. Well, who's left to buy at those peaks? And so it's time for a bit of adjusting, in the rate cuts, time for some surprise moves, I guess, with the first quarter and the first half of 2025 before we potentially continue on with this 5th year of the cycle. So this is the Dow Jones 10-year cycle, year of the decade, 120 plus years of history. Year 5 is typically an up year, a green year. Starts where it is and ends higher. How does it get there in the end? Anyone's guess. The average is this line you see here on the chart. Doesn't mean it has to play out like that directly straight up, especially after the year 4, which we saw was green year, 25% return. Year 3 was a 20-something% return, nearly 30%. However, 2024 wasn't this sideways. So we saw a lot more gains in 2024, which might mean 2025 has a bit of a rough start, but still ends green. That's essentially what I'm looking for here. And as I said in the intro, maybe the inflation story, the narrative will begin to come back towards the end of this cycle as well, because it's only just starting to pick up a little bit of steam here. Maybe you haven't heard it around on the news yet, but when you look at your oil numbers here, we have the heating oil, we have natural gas. You can see all of these are starting to begin a bit of an incline. Base has been forming here for many, many years. You see it going all the way back to early 2023, even late 2022, into this range. This is just for oil, between $60 and roughly about $85. It's now started to break past 76, and the last few days have been pretty damn vertical. So eventually you're going to see some sort of short-term correction, provided it remains at these levels. And the same thing for heating oil, pretty strong move, even on the open here on Monday. The open pit session hasn't even begun for the night, and you're already seeing it up 2.5% after Friday's move of 4.6%. Natural gas also having a pretty big move here, 5.7%, massive gap up on the open. Just pretty strong moves with all of the energies. We also saw it with the metals. Gold had a pretty strong close to the week as well. You've got copper also having a pretty strong close to the week, starting off not too bad at the moment. Silver also closing relatively strong just compared to the last couple of weeks as well. So a lot of these metals, the energies, things are starting to move higher, even in the face of the US dollar having a strong closing price to the upside. So as I said, the cycle here still well and truly on track. Winner's curse, everything going up, house prices and the economy, but something will eventually give. And we just haven't seen those signals yet unfold in the prices of the stock market. You can point to anything in the economy. There's a lot of things that look relatively weak, but we're trading the markets. We're not trading the economies per se. So we can trade where the price action is. Relatively quiet days for crypto and Bitcoin over the weekend. The liquidations were pretty damn low, but of course it is the weekend and we're in a trading range, and it seems like the market sentiment is attempting to reset. Now, just before I go on too much further here, we do have the free crypto and economic report coming out this week. Link in the top of the video description. Put your name, email address. You will get the report delivered to you in the next 24 hours. Plus, in the meantime, you'll have the welcome gifts. Check them out down below. Trading guides, getting started in crypto, and the free Discord community. This would be your starting guides. Lots of cool stuff to have a read through there before the report comes out tomorrow. on with crypto and Bitcoin, and we're looking at the fear and greed index here. It seems like crypto bros are just way too eager. They're too thirsty for further gains to the upside. Any sort of dip they're getting, basically buying it up. Now, the fear and greed index here, an alternative me, has been a fantastic tool over the last, well, several years. But many are shunning this at the moment and attempting to use the the coin market cap fear and greed index, right? So there are a couple of different indexes out there. The reason I prefer this is that it has worked out very, very well over the long term. The coin market cap still works. You just have to learn how to use it slightly differently. I just like how this reflects the price of Bitcoin a little more, and Bitcoin essentially is the market. If Bitcoin's not doing well, altcoins over the longer term, 6 to 12 months, are not going to do well either, at least from what we've seen with recent history of the markets, of course. So I think it's vital to not throw the baby out with the bathwater in the case of the crypto fear and greed index here at alternative.me. It has been a very, very reliable tool. At the moment, it's jumped back into greed. And so the last time we saw this happen was a bit of a pump up and then a failure of that fear and greed index. Let's take a look at the daily chart here. Going back to March of 2024, here is the drop from April into May. So the top in March, the bottom into May. It did bounce out. So here's the price chart at the top. And then we remained above there for a period of time, and then it fell back in again. Got you to reset into the fear for a longer period of time, and then finally a reset there into the extreme fear. So at the moment, we've just hit neutral. And as we've followed now on the channel here, for the fear and greed index, generally, you want to see a very sustained reset underneath the greed or extreme greed for that next move. If you don't see a sustained period, yellow, orange, or red, it's very hard to build a solid foundation for a sustained move to the upside. Now, you could argue that the returns were fantastic, which they were, 100% there, going from $38,000 to 74, all right, just short of 100%. But then that was a short period compared to the 237 days that the price remained underneath that previous top. So if you're trading short term for a few weeks, great. But then you had to hold in there. If you weren't trading, you're just buying and holding. Then you had to hold in there for 8 months. So you had gains for a few weeks, then you had to hold for about 8 months, possibly in a loss, maybe in a slight profit, until the market moved again. So that's what I'm trying to prevent here, is basically those long drawdowns in, obviously in a loss, because you're just sort of like catching on towards the end. If that is the case, well, then you can use this to your advantage and just know that the market does typically reset in that sentiment for a longer period of time in a healthy bull market. An unhealthy bull market are the peaks. So that is the time when the majority of people are in there. And you see it in the previous cycles. And 2017 is a fantastic example of that, because these periods, if we had the fear and greed index, hard to say, obviously it's subjective, but I would say that you might see a spike into these levels here. It could be extreme fear, could be just fear, but it didn't remain in there very long. And not being able to reset that sentiment leads to a very shaky foundation and a shaky move to the upside, basically erratic returns, huge swings up and down, which then shakes people out, gets them back in. It's how you lose money in a bull market, even though the price is still going up. You're just unsure, is the cycle over here? Is it over here? Is it over here? Well, it was over here, but was it over here? Was it over back here? You just never know. And then the reset is just not there to allow you that time to digest the move to the upside. You don't get a nice clear stepping stone to that higher price. So ideally, we want to see it longer, but I don't make the market. I mean, I can't make the market. It's worth billions of dollars. Not even Saylor can make the market yet, which means we just have to continue to follow the chart, continue to follow the pattern here. And if we've seen that many times, the likelihood, no guarantees, but the likelihood of that playing out again is pretty high. So that's why I'm just reflecting back on March, or March top into that May low of 2024. What happened there? You still saw a bounce, still a significant bounce if you want to trade it. But for the long-term holds, just hang in there. It doesn't seem like the cycle's over yet. And as I said earlier in the video, there are a lot of signs to suggest that we're going to have a bit of a choppy quarter one, maybe even second half. Let's have a look at where these lows come in. 5,600 points is a big one there. might bounce, get a new all-time high, and then continue to be a little bit choppy for that first half of the year. So that's BTC. I've got the altcoins to get through as well. But before I jumped over to that, the weekly close was looking relatively all right. And that's why I've suggested that maybe we do see a bit of a rise here to 100, maybe even 102 over the short term because of this little 50%, the closing price above that 50% level. And that's the 50% extension there. High to low, projected off this top. That was at 94,200. And you can see the closes here were at $94,500. So a slight short-term sign of strength, which generally suggests, no guarantees, but over the coming days, might not be the next hour, but over the coming days, might get a slight retest of at least 100K. See where it goes from that point. Now, with the USDT dominance, you're also seeing a retest of the 4.2%. So it's testing it from the upper side. However, in the trading range, you could still see that there's some tests coming through for the 90K level, especially when we look at the USDT dominance at 4.2. Anything in this trading range is basically kind of a no man's land because it's still unsure of which direction it wants to take. Any movements to the upside here for the USDT dominance is bearish for Bitcoin and crypto. Any breakdowns of this level, maybe even it comes back and tests that diagonal again, maybe from the upper side, which would potentially be a bullish sign for the USDT dominance to test the upper side again. Man, ups and downs, Jesus Christ. Then you could expect upside for Bitcoin and cryptos. Let's refresh. From here, down, bullish for Bitcoin and cryptos. From here, up, bearish for Bitcoin and cryptos. And within that, you have a lot of support and resistance levels to watch throughout the next several days, even into a couple of weeks to see where that strength lies over the longer term. Glad we got through that together. And as we do, we'll get through Solana, ETH, SUI, and XRP. Solana, again, has had another couple of good days above its 50% level at 187, but it's still in its trading zone. So we'll make this really, really simple. The lows, 175. The highs, 211, 220. Anything in this zone is still trying to decide whether it's going to be longer term, medium term strong, or medium term weak. So while you still see the price between 175 and 220, anyone's guess. The higher on this side, it's going to be stronger. The lower in that price range, the weaker it is. So there's your 50% level. Anything above roughly 200, slightly stronger. You got to give the benefit of the doubt to the upside in the short term. Any closes above 220, looking okay for the longer term. So any failures below at that $200 level, that could then lead to further downside and more tests. Right now, really in this middle zone, which is why I think it's still really vital to keep watching USDT, get a little bit of a break, pop back up. That's going to be your cryptos popping up and then popping down. So that's Sol USD. We're also watching SUI. I'll get to ETH and XRP. SUI had that pop on Friday, which looked like it was going to go on another run to a new all-time high. However, the weekend, people sold it off. The traders sold it back down underneath that top there at 495, and SUI remains underneath that level. Are we starting to get another one of these patterns forming? At the moment, as it stands, it could be, because we haven't seen any sort of breaks above that top. However, same thing. Difficult game here. You haven't seen any breaks below. There's the December low to the top, and the midpoint is at $4.40. I guess the big question is now the time to be buying the dip? Personally, I don't like this area for buying the dip. I don't know if that's enough. Well, I don't think it's enough dip. Some might think it is enough dip, but for the majority of them, it doesn't seem like it. It could be over the next 24 hours, 48 hours, and people say, oh, you're wrong, it's going all back up. But overall, I would much rather see it for a longer period, bigger corrections, and look at those average corrections that we've seen with many of these altcoins, doing at least sort of 30% from those highs for a longer period of time. Just a couple of days doesn't seem like it's reset enough, especially when you layer the rest of the analysis for the broader markets onto this video. So the main thing is first half, maybe first quarter, relatively shaky. I think you might see a lot of fake outs to the upside, even if you get those high prices. Longer term, I think there are some good buying opportunities, and even longer term than that throughout 2025, I think we still have an up year, but it's got to do enough to shake out the majority of people, especially when they're getting so damn bullish. So for XRP, it did have a relatively good day there on the weekend. Saturday had popped up above the 50% level at $2.40. I'd been looking at potential corrections down to 160 or breakouts above those tops. For now, you've got a daily close above that. And on the weekly, it's also closed up at those at the higher levels. What it hasn't done is, of course, break through those tops there at 260 to 270. And then, of course, the current cycle top of $2.90. So pay attention to the volume here. If you start to see breakdowns back under $2.40, then it potentially was just a shakeout to the upside, and maybe we'll look to retest some of these lows here at 220 and roughly 190. As we looked at just with the data, you can definitely see that every time it has these significant pumps over basically its entire history, going back to even to the 2017 bull market, it does do pretty significant drops. Even these first moves out, that's a massive, massive pump, and you still had a 60% correction there. Now, some might argue that, well, it could be right here, and you're just getting this 1 or 2 weeks to the downside before another pump. Also possible, and in that case, then you just watch the swings. Is it putting in another swing and going to break those tops? Great. Get on board, take your profits, do what you need to do after that point. Now, the last one we'll look at is ETH USD. Throw it up on the Coinbase chart. And it's still, like Solana, in a rough no man's land here between the $3,000 and the $3,700. Let's take a look at this one here with a few more lines drawn on it. It's still closed above the 50% here at $3,200. So that's the weekly swing projected down. So that's basically running it off the double top signal. So there's a double top, looking for any price targets to the downside, 2,700, maybe 2,200, even the low hit 2,100. So in the short term, ETH held above the 50% extension level and also held above the 50% level here at $3,100. It's in a damn tight trading range. It could go either way, and I don't have an answer for you. I will have an answer for you if we break through the 50% levels at 3,600 and this peak here at 37, or those downside levels at roughly $3,100. Because at the moment, you're basically in a tough situation here, rock in a hard place. A breakdown of those levels there at 3,100, then you'd be signaling probably going to come back and test 3,000 at these lows, roughly around 2,800 as well. So that's a wrap of the crypto markets. Things don't seem like they're working out as many had anticipated for Q1 or even the end of 2024 for these big green upsides. And at the moment, we're in a rock and a hard place. Now, the beauty about this little bit of a close just above the 50% level is that it seems unlikely we would see much greater downside than what other people are suggesting, below that sort of $74,000, which was the previous top. Mid 80s, high 80s, still on the cards, and it wouldn't be the worst thing in the world. I'll be back with you guys for another update very, very soon. Don't forget to get the free crypto and economic report coming out in the next 24 hours. Name, email, address, and I'll see you guys back here at the next video very soon. Till then, take care. Peace out.